Good evening, viewers. Welcome back to our channel. This trading journey is an experience. It's an experience actually. So please, like we said, this channel is intended for educational purposes only. We believe we will bring you value. We bring you value right from our trading desk. Whatever it is we are doing, unfiltered, we'll bring it to you. And wherever we're making adjustments, we are going to also bring it to you and inform you, and in the hope that mistakes will be reduced as people get onto their trading desk and try to copy what they see from our content. Like I said, my colleague some days back did a mistake and entered a trade before the setup fully formed. And what happened? That trade has been in drawdown up until this moment. The trade has been in drawdown. Even though it will recover, it will take time to recover. We don't want nasty experiences in the market. And we've tested the trading system and seen that it's really a solid one. But even at that, risk management is key. You need to know when to enter, you need to know when to stay out. And just this afternoon, I did a mistake and then took a trade before it matured in gold and ended up wiping some part of the profits that we made, even though we are still in profit, but the profit has reduced. But with a trading system like this, we hope to recover in no time, and we shall continue updating you as the trade unfolds. But please, there is need to always make sure your setup has fully formed. We all know that the USD pairs are in upward trajectory, but there are times when they need to take a breath. They need to pull back, gather more steam and then rechallenge the high that they left on unbroken and sometimes even broken. So in the case of USD, JPY and USD CAD, such thing happened, and we've been buying them because we've been closing position. If we had actually left our positions open and trailed our stops, we wouldn't need to close any loss. But because we have been trying to protect, overprotection happened, and we tried to overprotect our small account, and we've been closing the positions, not you know not factoring in the fact that it will only pull back to a certain level and then continue. We were just scared that since this account is a highly liquid one, it could easily just take away our little capital that we are trying to build. This is the reason why we ended up losing some part of our profits. And you see, this is why people say in forex there is need to have capital, because with capital you wouldn't need to bother about quickly closing a position you know it's really going your way. Now this position, we took the idea from our 4 hourly, and we could see that same pullback we say you should always look out for has happened here, right? It has happened here. But before then, you can decide to go to the daily and check what is happening there. See what has been happening in the daily. The price has been moving upwards, and then it tried to challenge the high yesterday but could not. Actually, what happened yesterday, it tried to trade above the 2 days high but could not, and then started pullback. And this is all the pullback you're seeing on the 4 hourly. It's all the pullback you've been seeing on the 4 hourly. Look at it here. It pulled back up until the 21 EMA and then started to show signs of recovery. What we didn't notice was that just when we were opening our trades, the OBV indicator was pointing up, but the MFI indicator was also overbought. So in such a scenario, it is not advisable to buy anything. It is better you hold to see the extent of the pullback, because this gave us an entry here actually. After the pullback, we waited to see a close above what? Above the 21 EMA, which happened, I think, here. After it happened here, we didn't catch it. We now saw a close above the 9 EMA, and that double confirmed that trend is on its way up. But because we joined here, we were far away from the level where it started rising, so there is need for some pullback. Look at what did. When price closes above the EMAs, it tries to pull back again. It tries to pull back to take a breath and then resume its uptrend. You see, these are the technicalities that we must learn. Now, after it has pulled back, we can see, because we are not looking at 4 hourly, we're looking at it from 15 minutes. That's another mistake that you must try to avoid. If you open a trade on 4 hourly, please monitor it on 4 hourly. Don't go down to maybe you took entry on 15 minutes, but don't go up to 15 minutes to monitor that trade. Stay at the 4 hour time frame and monitor your trade. If we had stayed there, we would have seen that the move that has been happening after this entry that we took, because this pullback actually gave us our entry. We waited until this candle closed and then we took our entry here. But because this is called a doji, a kind of candlestick with a small body and then long candlesticks on either side, is called a doji. This doji needed to be mitigated one more time. This is why price continued to come down onto the body of the previous doji to mitigate some gaps before it continues up. And then because we were looking at it on the 15 minute, we were confused. We did not really know what. So you see, this multi-time frame analysis is something that I really want you all to pay attention to properly and get it, so that whenever you open your trade, sometimes you can just go and sleep or just go and face some other things while your trade, and give it time to develop, give it time to start playing out. This was why we lost this amount. We were at $19, we lost like $6. But with this you can see gold, what gold did. In fact, the greatest mistake we did was even on gold, where we just entered without going to the higher time frame to double check. So please, this is why the channel is here, so that we can go through what we are doing on our trading desk, see areas of improvement, see what we did and improved, and then try not to allow you repeat the same thing when you are also trading, because the system is there. Now it's time for you to now use the system to learn how to take trades, to learn how to stay out of trades, to learn how to take trades, ride trends up to profitability. So please, let's take note of this, and we shall keep trying to recover our account until we get back to that level where we were, and then even past it by God's grace. And that will happen soon, because right now we intend to monitor our trade on the 4 hourly. And where are we targeting? On the 4 hourly, we are going to target this high. I don't even so much like the structure on USD card. I prefer that of USD JPY. So I may end up going back to USD JPY, because this price here needs to break this consolidation, this range. It needs to break this range before it moves fast. So the reason why it keeps chopping us up down, but in the case of USD JPY, we can see that USD JPY is smoother, and it is also showing us some signs of recovery. Though we are not going to repeat the same mistake, we will monitor it on the 4 hourly, and by the time we see signs on the 15 minutes, we are looking for entry on the 15 minute, but our time frame where we monitor our trades will be on the 4 hour. So by the time we get a clean entry on the 15 minute, and what would that be? That would be when the price trades back to above the 21 period EMA, which is that red one up there. By the time price trades above it and closes above it, then we have an entry there based on what we are seeing on our 4 hour chart. Look at it. There is a breakout on the daily, and that's the retracement that we are waiting for to finish recovering. Even if it has not finished, no problem, we wait for it to finish. We just wait for it to finish because that's our time frame, the time frame that we monitor our trades on. It may need to trade up to the blue indicator or even past it, depending on how deeply it wants to retrace to. You can see even in the past it hardly broke beyond the 21 day EMA, the 21 period EMA, sorry. So as it attempts to touch it, it may retry it again a second time. Maybe it just want to perfectly touch it, then begin to prepare to move up. Even when it turns, we will not follow it immediately. All we will be doing is trying to look for a good entry, and that's where we have double confirmation that we now have an uptrend in play, and that is when price now closes above the 21 period EMA, like I said earlier, which is this red indicator. So please, viewers, stay with us as we follow the development of the trade. As for our current trade playing out here on USD card, if we see that the choppiness is too much, we quickly close the position and just to wait for a cleaner entry. Thank you very much. We win together by God's grace.